Smart for Life is a global leading developer, marketer, and manufacturer of nutritional and related products. With me is CEO Darren Minton and also the chairman AJ Cervantes. So welcome. And I guess let's just start with an overview of Smart for Life. So it's an interesting company name. What is it you do exactly?
So we are first and foremost in the health and wellness sector. We're committed to creating great products, nutritional products, supplements, vitamins, nutritional foods. We have a number of different brands. Our products range from capsules, tablets, to nutritional foods. We have a whole fabulous product line of nutritional bars, for instance, diet foods that are original Smart for Life. When we acquired that company, we actually renamed the public company Smart for Life because we thought that that spoke to the market and resonated in terms of what we do. So it's really a broad array of brands, manufacturing. We have two separate manufacturing facilities, one in Doral, one in Riviera Beach, California, and we're probably now about 60,000 square feet under roof between the two facilities. And it's just a broad range of terrific products with great brands.
Yeah. What are some of the brands? Can I buy them at a store?
Yeah. So the Smart for Life brand itself, you can buy in Costco, Walmart. We're expanding into other retail channels. We also sell extensively on Amazon. We're actually just part of a press release we announced about 2 months ago. Amazon selected us to be one of their launch products in Singapore. So that's fantastic. We're looking forward to expanding our sales in that region in Asia. And we're also selling aggressively direct to consumer. That's something that's been big during COVID. You know, people can't get into retail channels as much. So by buying directly on our website, we're able to help consumers out directly and fulfill to them directly. We also have a couple other brands that we manufacture for that are very large. We work with a company called Milk Dust, which helps women with lactating during the kind of problems with the baby formula.
That's right. Yeah, no, it would be helpful to a lot of people right now.
Yeah.
And we also work with Nickelodeon as far as their Paw Patrol band, which is sold in Walmart.
I know Paw Patrol. My kids are
All the
older
little
now,
kids.
but I do know them. Yeah. So you sold in the U.S. and Asia. Any place else globally?
So a lot of our products, as we were talking about earlier, we both are a contract manufacturer as well as some of our own brands. So we've got brands that we sell internationally, mostly in the U.S., in Asia as well. And then we also contract manufacture for a lot of different brands, both supplements, vitamins, as well as food products. So we sell in South America, North America, in both Canada, the U.S. and Mexico, throughout Europe, and also in Asia.
Yeah. Now, tell me about the wellness industry, because I feel like that is such a hot area. People are so concerned, even before the pandemic, but now even more so. I mean, how are you seeing just the overall industry?
It's really interesting. When my background's private equity, and we work to identify opportunities in different industries. We're consolidators at the end of the day, acquiring companies first as a platform company and subsequent acquisitions. It's a cliched term, synergistic, but we look for synergistic acquisitions. And we were never prescient enough to have seen over the horizon that the pandemic was coming. So when we started the company in 2017, ultimately we were in the right place at the right time. And in the early stages of the pandemic, if you go into a CVS or a vitamin shop, the shelves were almost cleaned out completely because people look to nutraceuticals as a way to boost their immunity systems, to take preventative care of themselves. So, and what's interesting about it is there's such broad demographic appeal to nutraceutical products, whether it's the millennials that embrace them, senior citizens embrace them. They use nutraceuticals to help manage their cost of their medicine, their prescription medicines. So it's really a very broad, universal, and universal I mean geographically universal. And again, at the end of the day, we're in the right place at the right time.
Yeah, no, it just seems like people are, and they're trying to prevent, you know, and just make them have more energy and just make themselves feel better. So I think that's, you know, a big macro trend that we're seeing. Now, I did see on your website you're looking at like a build strategy. Mainly, it sounds like through acquisitions. Right. Okay. So.
Yeah. So the structure in many ways is very formulaic. We only look for profitable companies to acquire. We look for those that, again, are complementary to what we're doing. We have a relatively standard formula, which is, depending on the company and what type of business it is under the nutraceutical umbrella, we'll pay 4 times to 6 times trailing EBITDA. We generally don't pay more than 50% cash. The balance is in a combination of a seller note and then stock in the public company. The value proposition for a seller is relatively simple. Many of these owners of these brands may have owned them 10, 15 years, for instance. They have a very successful brand that sells on Amazon. They're too young, as we say, to go to the beach, but yet they would like to have a liquidity event. They have the ability to take cash off the table. They have ongoing employment. We like to retain the DNA, as we say. They created a successful company. We want them to continue to run it. And then they also have an equity interest in an emerging growth public company. They get the benefit of the elevator ride, if you will, by taking a position in that public company. So it really, the value proposition for a seller is terrific. The ability to then bring that company into the overall fold. We've done 4 acquisitions in the last year. We have over $100 million in our pipeline of prospective acquisitions in various stages of negotiation. Agreements in principle, could just be earlier negotiation. In some cases, we're moving toward definitive agreements. So it's really a very, part of the beauty as a consolidator is it's a very fragmented industry. There's lots of mom and pop companies that are very successful, 10, 20, 30 million in revenues, that work perfectly to come in under our umbrella, under the Smart for Life umbrella.
Interesting. And Darren, talk about the next 12 months. Say, like, what are your goals as CEO, and what do you want to do with the company?
So the next 12 months are going to be very aggressive. There's going to be, sort of a hockey stick is what we talk about with the acquisition strategy. In the past, right before our IPO, we had several small acquisitions, 4. Now it's going to be larger deals. So as opposed to doing 10 or $15 million revenue companies, the next acquisitions in the pipeline are 40, 50, some even 100 million in revenue. So you'll start to see a nice uptick in the size of our overall company, and that's how we're going to get to that 100 million in revenue that AJ was talking about in 12 months, and the 300 million in revenue in 36 months. Some of those acquisitions we haven't identified yet to the public markets, but we've talked about that at some of the conferences we've been attending to. Now that we've just gone public, we're outside of our quiet period, and so we're going to be ramping up our awareness and communication to the street and letting people know everything that's going on with our company. A lot of companies went public when we did. It was right at the time of the Russian invasion of Ukraine. So I think there was a lot of market turmoil. A lot of companies were affected by that, including ours and our stock. And so now we have a great base to build from as we continue to accelerate our acquisition strategy and continue to hit on those major milestones.
Now, in your acquisition strategy, are you looking at companies that are doing what you're doing, or are you looking at adding some other kind of sources of revenue in different businesses?
Both. I mean, I think it's a little bit of, adding companies that are in that sector, nutraceuticals, but there's a lot of different vertical and horizontal pieces to that. So, for instance, there's other contract manufacturers that might be interesting to add. We want to look for synergistic companies that add something new to the mix. For instance, our next acquisition of Greens First, great product sold in doctor channels where it's vegetables in a capsule. You go to a doctor and you say, oh, you're really not eating enough vegetables, you need more vegetables in your diet, try this capsule. So that's a great product. We're excited to close on that acquisition in the next couple of weeks. The nice thing about it, one of the synergies, is we have contract manufacturing, including in Miami, where we make a lot of those products and vitamins. So as soon as we close on that acquisition, not only do we have that great new product as part of our brand portfolio, we can also manufacture that product in our existing facility and have more control over the supply chain. Before COVID, it was important to have more vertical integration just as far as minimizing cost. But during COVID and after COVID, not only is that important for the kind of profitability of the business, it's also important to just have product on the store shelves. And now it's just, hey, making sure you actually can sell it.
Supply chain issues. AJ, do you have something to
Yeah, no, I was going to, one of the things I think that's very relevant is the product offerings can be very different. And the benefit of having, as Darren said, captive manufacturing, whether it's capsules or tablets, or in the case of nutritional foods, there's enormous diversification under the public company umbrella, but there's also the ability to cross-market goods and services, products, for instance. As Darren said with the Greens First acquisition, they spend over $2 million a year in contract manufacturing with a third-party manufacturer. all of that business
Comes
now
under your umbrella
migrates
now.
to us. Yeah.
Okay.
So we get the benefit of that. The Sports Illustrated nutrition brand, which we have, because we do these great nutritional food products that can be high protein, low carb, those kinds of things, to not have to go through extensive product development, but because we already create them for Smart for Life, that product. We encourage people to go to YouTube and look at Smart for Life. There's some great videos about the product and the company. That same product then repackaged and branded with that terrific Sports Illustrated brand. If you go into a CVS and you see all the protein bars and you see Sports Illustrated Nutrition with their classic branding, your eye's going to go there. You have the benefit of brand equity as part of that process. So those are some of the benefits that come from having this diversified base of different companies complementing each other.
Okay, very fascinating. Thank you so much, AJ and Darren, for joining me.
Thank you,
Thank
Jan.
you. We appreciate it.